Welcome back. You're still tuned into Trading Hour here on CNBC-TV18. And let's talk about the new listing on D Street. ESAF Small Finance Bank listed at a premium of around 18%. So the listing price is around 72 versus the issue price of around 60 rupees a piece. We have Kadambelil Paul Thomas, MD and CEO of the company, joining us now to take some questions. Mr. Thomas, thanks a lot for joining us. And what a good day to be listing, right? So season's greetings and a very happy Dhanteras to you as well. Let me just begin by asking you, because there was very strong subscription to your IPO, especially on the institutional side. Can you take us through some of the large institutional investors that you have on board?
So on the Anger side, we have Kotak Life Insurance Company, ET Life Insurance Company, Family Care, Ovata, Argents. All these foreign investors also came on board, and we have got a very good response from all the banking treasuries have participated in the issue. So that's what I have seen.
But no mutual funds have participated, right? I don't see any mutual funds which are part of this. So none of those on board?
In the Anger book, there was no mutual fund. I think on the main book, one mutual fund has come.
So I wanted to talk about growth for you ahead now as a listed company. You predominantly cater to rural India. About 60% of your deposits, your collection centers, etc., centers are in rural India. And we know the opportunity there is huge. It's hugely underpenetrated. I was reading somewhere the rural centers account for 47% of GDP, yet they received only 8% of the overall banking credit. Keeping that in mind, what could growth rates for you be? The NII for you has gone up by 40% from FY21 to FY23. Can you continue with that run rate?
See, on a 6-year CAGR, we have grown at a 39% growth. So you are right on the assumptions on the rural potential. So we have a very good rural network, and we have got the expertise also. We have built over a period of 30 years. We worked, and see, in the next phase of growth, India's growth, I believe that will come from the rural and semi-urban areas. So the GDP contribution, as you said, it is 47%, but the credit inflow is only 8%. So there is huge potential in these markets, especially the micro entrepreneurs, the farmers, and rural overall segment. Even in affordable homes, we have already built these verticals: affordable homes, mobility, agri-business, gold loan. So all these new verticals we have built over the last three years. So all will going to give us results. So we are very confident that this growth will continue.
Mr. Thomas, allow me to come to some of the sort of questions around the IPO, the operations as well. And that relates to a huge dependency on the promoter group. I mean, looking at the data that I have before me, it appears that almost 74-75% of your business is coming from promoters, of course, through banking correspondence. That's one. And in the past, the RBI has sought clarifications on some investments the company has been making in promoter group entities. I mean, apparently there was some share purchases, etc. Can you shed some more light on this? And how do you plan to de-risk and diversify away from promoters?
See, we have adopted a business correspondent model to reach out to the last mile, especially the micro loan sourcing and servicing. And we started with a promoter group, and at that point of time in 2017, they have been working as a business correspondent for the SYL microfinance company. That's why we started with that. But over a period of time, so we have onboarded around another 25 institutional business correspondents. So this has started in 2019. So during COVID period, they couldn't do much. So, but all of them now started sourcing business, and the promoter cooperative handling the BC will definitely come down over a period of time. Next 2-3 years, this will come down. That's one part. And it was only a clarification in 2018. Bank issued shares through a private placement, and the cooperative also participated in it. So the RBI has just asked a clarification on that, because the cooperative was also part of the holding company.
Okay, sir, since we are talking about the listing, can you tell us why there was so much of a delay in bringing the IPO? I do believe that there were repeated reminders by the Reserve Bank in order to, come to the market. So why this kind of delay?
See, as per the RBI guidelines, we were supposed to complete the listing in 2021 July. So we have started our process in 2019 itself, and we got the SEBI approval for our DRHP in March 2020. So we all know that March 24th onwards, the COVID lockdown started, and the customer segments where we serve are really impacted. So even we have tried again, but we couldn't complete the process. But RBI gave us extended time till November 30th. So we have completed the listing process today.
Got that. Sir, can you talk about your expansion plans? You have about 700 banking outlets, which includes 59 business correspondents. Can you tell us from 700, when do you hit 1,000? How many outlets do you plan to bring, sorry, I can't get the right word, but how many more banking outlets will you say launch in next year and the year after?
So this year we have got an approval from our board to open 50 banking outlets. So for our reach and point of sale, we have customer service centers operated by our business correspondents, which I mentioned earlier. So around 756 customer service centers are being operated by the business correspondent partners. So this also generates a lot of business. So we have already diversified into 23 districts, 23 states, 21 states and 2 union territories, and we have been in the market for last 20 years in Maharashtra, Madhya Pradesh, Chhattisgarh, Jharkhand, Bihar, all these places we have got a very good presence, and in these geographies and also the new geographies where we started 2 years before, Rajasthan or Gujarat, UP, Uttar Pradesh, Orissa, and Northeast. All these geographies we will be opening more branches, and also the BCs, the customers will open more customer service centers also.
Okay, just quickly on the headline numbers, I can see that your margins are actually quite higher compared to your peer set. Your NIMs are close to about 13.5%. Can you give us some sense on your cost of funds and how you're deriving this number? And also, what's the outlook? Can you sustain this?
See, before COVID, we have been maintaining a NIM of around 9.5%. So during the COVID period, it has had a hit on it. And then our cost of fund today, it is around 6.25%. But we are expecting a lot of, due to the deposit rate hikes, we are expecting some increase in that. Even then, we are expecting that we will be able to maintain a NIM of 9.5 to 10% over going forward also. That is our expectation.
To drop from 13.5% right now, 9 to 10% is sustainable, you're saying?
No, I'm saying on a long-term basis.
So could you define that? What do you mean by long-term?
No, the 13% is for the first quarter. and a lot of repricing has happened on the deposit rates. So and we are also now will be our diversification is product diversification is also happening. So from micro, it is a high yielding product, micro loans. So we are now expanding in gold loan and affordable home loans, agricultural loans. These products are as these products increase, there will be a little bit the margins will come down on that. That's what I said.
Okay. All right. Got that, Mr. Thomas. Thank you very much for joining in and giving us some perspective on the business. So that's the new listing of the day. We do have to quickly move to the